Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody, and welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you've all had an absolutely amazing 4th of July week as we are heading into I would normally call this hump day, but since tomorrow the markets are closed, I guess today may be our Friday. I don't know. We'll see. So we're going to do what we do each and every day here on the DMC, taking a look at the same 10 to 12 futures markets from an educational perspective, identifying both breakouts and potential reversal trades. Let's dive right in. So starting today with the S&P, starting today with our ES position, we're up 5 points. So in our ES position, we had a potential reversal yesterday, and we actually got a pretty nice little move out of that reversal. But we were basing below the level, and so one of the things I talked about on the DMC yesterday was that it's a slightly lower probability level, but we did hit it and get a nice little 2-to-1 move away from that zone before then reversing and heading higher. Now, we headed a bit higher, and we came to this area here that I said could work for a little bit of a breakout to the upside, and we did get a bit of basing below that level. So you could have taken this little bit of a move here. It's moved about 7 points from there. If you didn't catch that breakout, then I think you may get another bite at the apple right in through here for a potential reversal. So looking at this reversal point, you're looking at, right in here at the European market. Now your stop would have to go below the pivot. But this would be a potential spot for a reversal and an opportunity to get long if we get a little bit of a pullback. And that would be about a 6-point pullback from where we are right now. We're a little bit less than an hour from market open, and we'll see what happens on the U.S. equity market open. NASDAQ level, this is the one that we had broken through yesterday when doing the DMC and said that an old area of resistance may act as a new area of support. And so I'm going to leave this in place just in case we do make it down into this region. I'm not sure that we will, but this has become a little bit of a fair price value area, so I'm going to leave that one in place. I don't see any real reason to add anything more to that. We are coming closer and closer to that 78, 79.5 all-time high. We're not quite there yet, still about 20, 25 points away, but definitely that could act as a bit of a resistance point. We'll see what happens as we get a bit closer. If you want to see a reversal, you might get another, instead of waiting for price to come all the way back down to that fair price value area, same thing that we have in the ES, you might get a little bit of a shot right in through here if you want to give that one a go. Now, crude oil. Yesterday, our trade of the day was our crude oil short. Leave me a comment down below if you took the crude oil breakdown. That breakdown was an exceptionally well played breakdown. We got a really nice strong move away. Price came down and hit both target 1 as well as target 2 inside this breakdown. And as that price was kind of falling throughout the day, one of the things that we wanted to do was maybe manage that trade effectively. We had a little level of demand down here where we had gapped up, but we had talked about the fact that this demand level was not going to really be a strong stopping point because it was a retest of this area here to the left. This was actually a demand area from our prior weekend edition of the Daily Market Commentary. And so we had the update. I'm going to pull this up here real quick. At TradersArmy.com, we actually have live underneath Trading Room. There's an area that says Trade Updates. And so, at 10:43 was when we hit our first target. And so we moved our stop down to 57.45 to lock in our 2-to-1 profit. And then the CL hit its second target at 1:35 p.m. So throughout the day, we actually post updates as the trades happen, and I'll talk later about our British pound position. So about that one. And then gold, bonds, and the yen sitting in their areas, but basing at the level, we don't want to hold it past 6 candles. So I'll go over those in just a moment. But the point behind this one is that the CL level had 2 target areas built in, and that would be the level that we were most interested in. By the way, if you're not a Traders Army member, you can join now. Promo code SUMMER50 for the next 3 months, 50% off your next 3 months subscription. All right, so I'm going to remove these lines now simply because we've got our breakdown. It's occurred. I still want to leave the area that caused the breakdown as a potential future supply zone. So I'm going to let me change these line colors here just so I have them done the right way. I am going to leave this area here as a potential reversal now if price comes back up into this zone. Now I will say that I'm a little concerned with this area only because of this wick. So this wick here makes me a little bit more nervous of this area. This wick means that this level here is not a fresh level. It's already been tested because we moved away, moved down again, popped back up into it, and then moved away. So I actually can't take this on the first touch. I need to make this a confirmation entry simply because of that wick. Now, that wick, was means that this was a retest, but was just a touch and go, and so quickly that I think it could still be very valid. Now, we still have some demand down below us, and this one, frankly, I've been waiting on price to get to this demand area. I think it's a pretty good area of demand. And in the overnight sessions, we had this, we kind of just chopped along, and we started to roll over just a little bit here before U.S. market opens, but tempted to look at this little wick over wick area in here, and let's see how our arrival is to this wick over wick area in here. And then also this area here could be a reversal point as well, but I don't like the basing below the level. So for now, I'm just going to leave it those wider zones. Now, gold, as we talked about earlier, gold was basing below its level. So we came close to the level, had another candlestick here. And so this would be basing before a level. Basing before a level, if you heard me say it once, you've heard me say it 1,000 times, it's the kiss of death, right? Kiss of death is basing before a level. And so no huge surprise that one didn't come through. However, now when I look at this, I see that basing before the level could act as a former area of supply, could act as an area of demand. Now that was the gap that we went right through. However, now let's take a look at that area that was basing before the level and see if that can become a place where we see a bit of a reversal from in the future. So look at this area here for a potential reversal trade. Looking at our bonds and our currency markets. In the ZN, so the ZN, we came into the level, had some basing just before it, but we came into the level, 1, 2, 3, 4, 5. At 6 candlesticks, price had gone absolutely nowhere. And so this one broke up higher, to no surprise with the 6 candlestick rule, and then came up to set this new high. And so now we're looking at a potential reversal. Well, I'm going to come back to the area where we based. Oftentimes, you'll see that those 6 candlestick rules wind up being really good trade opportunities for both breakouts and reversal trades when price comes back into them. It almost, kind of goes full circle in that way. The Aussie, we are between our areas of demand and supply on the Aussie. So I've got really not a whole lot to add on this one. If I go to the 4-hour, you'll see that my trend direction, while still heading up, if you remember, we didn't like any of these areas because of all these wicks. I think we could see a little bit of a pullback from where we are right now. But then I think ultimately it would thrust a bit higher. So looking at this, I might want to look at this area in here, this European market open, for a potential reversal. See if that one can hold. The euro, we are between our levels in the euro, although coming close. You could get a little bit of a breakdown, I think, below here to run down to our eventual demand. Let's see if we get basing here. It's not a huge move, but it could give you a little move down, or run down to our eventual demand. And then the Canadian dollar is still just hovering between our zones, our zones of demand and supply. Now let's look at the pound and the yen. So the Great British Pound, we had our setup, and on the let's open this as soon as my lines join in. There we go. So inside of our pound, we had our setup price returned back to our level, and then almost immediately gave us our price target movement and continued to move down. So if you took the pound, leave me a comment down below. Let me know if you took that pound short, as prices are continuing to move down on that one. And we are seeing a really strong downward trend environment and a little bit of a potential for a reversal candlestick actually right now heading into the open. So let's see if we're essentially reversing off of this level here. So if you're not in this thing, I think you got another leg down to go on a candle to candle short opportunity from this point, with our next stopping point being maybe this 25.58 area right in here. Japanese yen price came into our level, and this one unfortunately was our 6 candle rule once again. 1, 2, 3, 4, 5, 6. So worst case scenario in this one is you should have been stopped at break even if you follow the rules. And once again, that's why that's one of the reasons why we talk about and lean on that private trade feed. That private trade feed is really to give you kind of those updates as our trades kind of set themselves up to keep us out of dangerous trades. That was really the setup behind those, along with our individual equities trades that are added in our trade worksheet. So if you got any questions, please feel free to send me an email, support@tradersarmy.com. I will say, for those of you that are regular subscribers, we will not have a live trade room tomorrow as it is the 4th of July holiday. Hope everybody has a phenomenal holiday with your family in the U.S. markets as we are closed. If you're not in the U.S. markets, understand that the U.S. markets being closed will affect global liquidity overall, so just be aware of that. But no live trade room, no daily market commentary tomorrow, as I will be taking the day off, playing a little bit of golf, spending some time with some family as I'm still on vacation for the week. Hence the reason why the sound has been so bad, by the way, all week, because I don't have my normal studio set up. So, all right, everybody, hope you have a great day, and I will see you soon. Later.